Hi guys, hi. Welcome everybody to our final week of Trading Zone. It's been an incredibly busy week. I'm just trying to figure out. I'm sorry guys, I don't like my camera view here. All right, this is the best I can do today. I'm sorry. I'm in a different location, so the camera view it is what it is. Okay, I'm going to try to share my screen here and get into the see if we can share my view. Okay, hopefully you guys are able to see the screen. I'm sharing my calendar, and obviously, this week is a much lower week as far as event risk goes. However, if we have any less volatility, all of the events from last week, major impact trade as we start this week. Last week we talked about the idea that if the Fed was going to be hawkish, watch for the lower levels in equities, watch for lower levels in the euro. And it took maybe a couple of hours after the Fed reaction. It really started to go our way. My primaries last week were long pound, short pound Swiss. Really, there was going to be, Europe, that basically that the pound was vulnerable. Had no idea how vulnerable pound would be, and you saw the pound last night just crash. We had a flash crash in the pound, and that's really sort of like the big in FX. That let's talk about it. Before we kind of do that, let's just counter. As you can see, it's just Powell talking back. Talking and really very on the counter. We have the PCE core index, which is an important data point, but nowhere near as important as the CPI, PPI data points. So that could be the only real mover on docket. But the docket, as far as event risk goes, examine what's going on. So let's go longer term. Just a 1 hour chart. You can lapse of pound overnight all the way down to the lowest level in modern history. And I think, of course, question on everybody in pound. Very possible. I tell you why. Because the UK policymakers have basically got themselves to a no-win situation. The reason why for the weakness of the pound was the fact that the new Prime Minister Truss announced very fiscally responsible, but call it that way. It was basically the idea that she was going to increase a huge amount of benefits, including support for energy prices and all sorts of other things. While at the same time, cut tax havoc UK bond market, the gilts, where prices verticalized and continue to verticalize, basically as a sort of a vote of no confidence by investors. Type of financing economy, its own currency, is going to have to really woo investors' capital to be able to provide returns will feel sound with, given how fiscal spending is being done. So all of that is just had a really negative impact on UK yields, which in turn has had a really negative impact the pound. What happens typically is the higher the attractive the currency becomes. With a caveat, and that investors the currencies that interest rates are actually going to price. Because remember, the real question is, are the interest rates real? And I mean that in both terms. Real interest rates in finance mean, is the rate of return above the rate of inflation, right? That's sort of the classic economic definition. But there's also what I mean by a political idea of real. That is, are the policymakers going to stand behind their currency, or are they just going to print it endlessly and therefore debase it completely? And I think what you're seeing in UK is a complete loss of confidence in the government. Is when a currency declines very sharply, it's almost always a political as well as economic factor. And the political aspect of it is just simply a loss of confidence in by the investor class in the policymakers' ability to sort of control their destiny. And when that happens, it really doesn't matter how high the interest rates are. I mean, the prime example of this is Argentina, which has 100% interest rates and nobody wants them. And the reason, of course, is because it's the key question isn't how much interest you're going to pay me. The key question is, do I have any faith that you're going to pay me back, right? With any kind of value. And once you lose faith, there is no amount of money you can offer me that will make me want to be willing to lend money to you, right? It's sort of like once you lose the faith of your ability to pay back credit. Credit, the credit is a Latin word for belief, right? So once you lose belief, you lose faith, you pretty much lose everything. It doesn't matter what you tell me. I just don't believe your words. And that's really sort of the bind that the UK policymakers find themselves now, which is why the higher the interest rates, the lower the pound goes, contrary to normal course of events in the currency market. And yeah, there's a lot of speculation now that the Bank of England is going to have to come out with an emergency rate hike of 300 basis points, well above what they want to do. The country is already in a deep recession. It's going to go into perhaps a monstrous recession if they do that. And all of that creates a tremendous amount of hardship. I think you're going to see lots of social unrest. None of that is just positive for the currency. And more importantly, really now it becomes a political question. The political question of are the current UK leaders, both on the monetary side and on the fiscal side, in any way, shape, or form capable of managing this crisis? So my answer, obviously, to that is no. I think they're sort of new. They're badly tested. They've really misfired on a lot of areas, and they're very naive at how the markets are going to react. And that's going to be interesting because the other possibility here is, does the UK Treasury intervene? But they really don't have that much FX reserves. I mean, UK, what people don't appreciate is that UK is one of the most indebted nations in the world. It's just always been able to rely on this whole idea of empire status. UK punches well above its weight because of its history. I mean, its economy it's like smaller than Malaysia and Indonesia. There's 1,000 countries in the world that have bigger, more stronger. Brazil, for example, certainly has a much bigger economy than UK. But UK sort of carries prime importance in FX simply because of the empire status. And the other aspect, of course, for UK that's very, very negative is the fact that they chose to leave the empire, because the empire these days is really the European Union, and they chose to leave that empire via Brexit. And essentially, the big talk when Brexit was happening was people were saying, look, United Kingdom was going to go from being United Kingdom to being Little England, and it was a facetious and kind of a cruel thing to say, but it's really becoming true historically. So that's it's a very serious problem. And all of that leads me to believe that parity is probably inevitable. Like, I think people smell blood here. This was a clear flash crash that sort of tested the lows here. It's very likely maybe we'll have a couple of consolidation days. Maybe we'll even test the 110 at this point. But if we do test the 110, it's probably going to be an excellent area to sell rather than to buy, because inevitably, I think at very minimum, we test the lows, but I think it's very feasible that we go to parity, which is going to be shocking to everybody, but probably not until we get to that point. Is there going to be any kind of a true bottom in cable for the near term? So, cable is a very big story with essentially sell the rally type of a momentum as far as we go forward. Um, as part of the strength of the dollar, you also saw the euro really, really come down. And one of the things that I talked about in my kind of monthly forecast is I thought, FX markets go to extremes, it's very likely euro kind of tests 95. I think they do. I mean, they sort of tested this 95 level, but I think this is an area where you will get a modicum of support. So overall, to me, the trade that we talked about originally, which was the euro pound trade, right? Which had this massive vertical move, and now it's just coming back down. I still think on a longer term basis, this is the trade that's probably going to work relatively well. In other words, I think we could see 92, 93 in euro pound as we go forward. The other trade that's interesting that we talked about was pound Swiss, which may be even a better trade simply because, of course, the Swiss um, the Swiss economy is much stronger than the UK economy on so many levels. A lot of all of this is certainly going to be effectively. It's really going to be a pound story, and none of these currencies are going to grossly outperform against the pounds because pound is so volatile. But regardless of, I probably would actually, frankly, if I wanted to have the strongest with the weakest, would probably keep myself um, in a pound Swiss trade with a pound Swiss sort of, the 110 as the absolute, where would I be wrong on the pound Swiss story at around 110? Uh, does the pound Swiss have a chance to go down to parity? Absolutely. I think if pound goes to parity, pound Swiss goes to parity. So it's sort of a similar type of a story. We're mid range from these 2 points of contention, but uh, any kind of a weakness on the hourly chart, the 4-hour chart, is going to invite my shorts here at these levels, because I think this selling in the pound is not done. I mean, this was obviously panic selling, flush selling, but typically when you have these kind of flush moves, there's continuity 2 or 3 weeks down the road. So you have to just be sort of very, very patient and wait for that continuity to take place. Having said all this, the critical thing about trading the pound idea is, because the volatility is enormous, is typically you would trade some of these trades maybe with a 100-point stop. You really have to have a 500-point stop and a 500-point target. You got to be just enormously, enormously. Um, my chart is not visible. Oh, why is my chart not? Oh, you seeing you? Oh my God, you're seeing the. Okay, let me see if I can share my chart. For some reason, I'm not visible on this chart. Um, hang on. Why is my chart not visible? I want to chart share. Uh, Screen. This one, screen two. Share the screen. Okay, so maybe now you'll. Hopefully you can see my chart. Now I'm frozen again. Uh, okay, I'm in the show. Let's try this. Try this one more time. We're gonna go share my screen. Share the screen. And okay, I'm gonna have to leave. Guys, I don't know what's going on. Something is going on with my ability to share screen. So let's just talk a little bit about it. As I said, look, I think pound goes to parity long term. That's the bottom line right now as far as the big trade goes. As far as, let's just talk about the other markets. I'm just going to talk to you guys because I can't clearly I can't share anything today. And then we'll follow up on all these ideas on Wednesday. Be sure to join me on Wednesday when we're in GoTo, where where you're going to have much better ability to see my screens. So um, as I said, pound is very, very vulnerable to parity. Probably pound Swiss is my favorite trade to express that. You have to trade that with 500 pip stops because that's how wide the volatility is going to be over the next couple of weeks. Um, as far as equities go, clearly very, very negative sentiment at this point. But we are getting very close to a lot of support points. I think whatever rallies we have are going to be pretty anemic. Nevertheless, I this is not a. I don't want to be shorting the lows here. I think you could nibble for positive, for maybe a couple of 100-point moves in Nasdaq, just sort of, relief balances in all of these situations. But overall, it still looks very, very negative on the equity front, simply because the Fed really remains super hawkish, and until they signal some sort of a relief condition, or, and this is the other thing, until we get a weaker than expected CPI number, so that the market begins to price in, much more tepid monetary policy. It just looks like a selling bloodbath. You just sort of sell every rally that goes, simply because the market the market is just now dump the inventory mode. Crypto remains hobbled very badly because it's a risk asset, and as liquidity pulls out of equity market, it's certainly going to get pulled out of crypto. One of the greatest disappointments, and I think this is a key tell, Ethereum doing a fork and actually selling off in the news is a super negative signal for the crypto. Super negative signal that people are only starting to now appreciate, meaning that crypto could be, another 20. Crypto could go 95% from its highs before it bottoms out, in my opinion, given the situation that's happening now. And gold staying relatively, stable at. Let me see where gold is trading this morning. Gold sort of like still trading at the lows, but it's making less and less lows. It's 1650 was support. Now it's sort of, I think, 1600. If gold breaks 1600, yes, you want to leave that party. But until so long as it's kind of holding these levels, I think there's a reasonable chance here for an upside pop as far as gold goes. So overall, if you want to summarize the structure this week, pound Swiss to the short side. Um, Equities are neutral. You can try to dip your toe to try to see if you can buy them on a small bounce back, or if you want to be patient, any kind of bounces in equities for 1,000 points in a Dow, a couple hundred points in Nasdaq are going to be sell the rally equities, because the markets are not really going to stabilize until you see definitively lower inflation prints, right? That's really seems to be the tell. And then crypto is just sell any bounce move. I think crypto is the most negative of all, with the fork in Ethereum failing on price as a key signal that nobody really thinks crypto has any value going forward. And oil and gold still remaining a tepid buy as long as it still holds the 1600 level. And oil is just a range bound trade, as we've been saying. Oil is going to be dead money for quite a while, and I would if you want to trade oil 70 to 90, that's your range. But for now, I think it's pretty much going to be stationary as far as that goes. So that's the markets in a nutshell. We'll go through the charts on Wednesday. Please join me then. I wish you guys best of luck, the best of trading. It's Boris Schlossberg, over and out.